Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm so incredibly humbled to be able to have your attention in this time for you tuning into Crush the Street, listening and supporting the program. What unprecedented times we are seeing right now in the economy with the system, the fragility of the system. We're going to be talking about that today with my upcoming guest, David Stockman. What a privilege it is to be speaking to the man himself. The interview's already done. You are absolutely going to love it. But I wanted to let everyone know, if you want the most up-to-date information on what is going on with COVID-19, the virus, the economy, visit crushthestreet.com/virus for this special report. And if you like what you're seeing in gold and you want to know what's going on, gold is responding tremendously above $1,600 in the 1650 range. Visit crushthestreet.com/gold for a special report on gold. They are both free. Just go to these links, which you'll see in the description area, and enjoy this interview. Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri. 1/3 of the U.S. is currently in a stay-at-home status in this environment. The stock market is on track for its worst performance since 1931. Fed and Congress are deliberating daily, and markets seem to ignore what the government and the Fed are doing. And to discuss all of this today, we have a very special guest, an expert on the economy and markets, David Stockman, a New York Times best-selling author, a returning guest. He served as Ronald Reagan's budget director. He's a Washington insider speaking truth, and he's the editor of David Stockman's Contra Corner, a subscription-based daily news and commentary service, and Bubble Financial Trader, a premium financial research publication. And he wrote the book Trumped, A Nation on the Brink of Ruin, and I think that's going to be very important today. David Stockman, thanks for joining me at crushthestreet.com.
Happy to be with you. And I think the idea of ruin, unfortunately, is a topic that can't be avoided. But, you know, I think the important point to establish here is that it's not the coronavirus that at the end of the day is bringing about this calamity that's enveloping the nation. We were fragile. The American economy is riddled with debt and bubbles, fragile supply chains, and it has become a hand-to-mouth economy where everybody assumes that Washington and the Federal Reserve has your back, and you don't need rainy day funds. You don't need cash reserves on your balance sheet. If you're a business, you can lever up to the hilt. You can buy back your stock. All the things that have been going on that caused a serious but moderate public health impact to be turned into what is shaping up as an economic calamity. So we'll get through this. I think in the next few months, this thing will abate. It is being contained. It has been contained elsewhere around the world. And the economy will revive itself. You know, capitalism doesn't have a death wish. As soon as the all clear is given, businesses will reopen, restaurants will reopen, people will go back to their jobs, their income, they'll start spending. So we're not heading to any kind of Great Depression. But hopefully, once we get to the other side in a few months, some big, deep questions will be asked about why we were so vulnerable to something that really an economy allegedly as strong and prosperous as ours should have been able to handle as a matter of course.
David, it seems like we took the stairs up, as the old adage is, and then the floor is falling through now. I mean, we're completely erasing the Trump boom in less than 30 days.
Yeah.
And, you know, the Fed seems to be at the door, willing to do whatever it takes. I mean, Neil Kashkari admitted that. And they are willing to act with swift and overwhelming force. In fact, he pointed to 2008 as a misfire. We didn't act quick enough. We didn't act strong enough. And that's because of that, we didn't contain the 2008 financial crisis. And here we are with the Fed attempting to throw trillions of dollars at this in an overwhelming sort of way. Can we read between the lines here a little more? Is it really because they're trying to do it better than 2008, or they have to do it way more significantly than 2008?
Neither. I mean, the Neel Kashkari is a clear and present danger to the American people. He was, the bag carrier for Hank Paulson when they panicked in 2008 and went around and bailed out Wall Street and the auto companies and all the rest of it. It was totally unnecessary. There wasn't going to be any Great Depression around the corner. That was just Bernanke running around with his hair on fire. And so now we have Bernanke Jr. in the form of this Kashkari guy who can't seem to get a real job anywhere, at the St. Louis or at the Minneapolis Fed, waving his arms. Now, I want to tell you, the Fed learned no lessons about what they did in 2008, and now they're doubling and tripling down. They're destroying the financial markets. I mean, for crying out loud, they're trying to drive interest rates to zero on everything, municipal bonds, commercial paper. Now they're going to start buying corporate debt. Who knows, next week they'll probably come up with an excuse to buy junk bonds. This is crazy. It's unnecessary. They ought to, in fact, the truth is, they ought to allow interest rates to rise and let the markets clear, let the speculators lose their shirts, be carried out on their swords, and people who want to invest for a risk-adjusted return to put their money into solid enterprises that want to borrow money. Well, this is 100% this is madness what they're doing. This doesn't even merit honest discussion. This is crazy. These people at the Fed have lost it, and they're going to make it far worse before it's over. Every single thing they're doing is wrong. I can't express it any more clearly than that.
And it's something that we've talked about here before. We've talked about the bubble, and we're in the middle of this bubble bursting moment. And one of the things that you mentioned, you alluded to, the coronavirus is going to work itself out. Ultimately, we'll eventually get back to business as usual. But how deep do you expect this crash, this recession to be? And I'll follow it up with this. There's a lot of talk between essential businesses and non-essential business. And, at this point, it all seems like a house of cards. What is non-essential when it comes to the economy as we have it right now? The Fed is trying to address all of these different aspects. It's like whack-a-mole, right? You hit one, you take care of one, and something else pops up. And, I understand, there's this Keynesian sort of response versus, a more Austrian free market capitalism response. But, we know the Fed is going to just do their thing. Congress is going to do their thing. And, I guess my question is how deep is this going to be? Because everything is tied in together.
Well, first of all, if you're going to have containment, if you're going to put sequester people, they ought to sequester the Fed, tell them to shut up, lock their doors, get out of the way, because they're not helping anything. They're just spreading fear, because people are saying, well, if the Fed is this desperate, they're going to, this week they're buying $125 billion worth of bonds and mortgage-backed securities a day. That's crazy. Last week they bought $275 billion, this week $650 billion or whatever. They're going to do $1 trillion worth of money printing in 10 business days. No wonder people are getting panicked. This is out to lunch, crazy nonsense that is not helping anything except spreading the fear further. Now, when it comes to the adjustment over the next couple of months, I think Wall Street is going to be the ground zero of the collapse. You talk about the stock market being down. Let's go back to 2016 when Trump was campaigning and correctly saying there's a big, fat, ugly bubble out there that is going to burst. Well, that was when the S&P 500 was at 2180 on election day. It's almost back there now. The 1,000 points that the S&P 500 went up, the 60% or so, 55 during Trump's first 3 years, was totally the final last gasp inflation of a bubble that has been being inflated by the Fed since 2008, 2009 padding. So we're just beginning to get back to rationality. I think, when the recession does hit the Main Street economy, and we'll talk about that in a minute, earnings are going to drop to $100 a share. They were $140 for the year just ended, 2019, easily dropped by 40%. So, put a reasonable multiple on that, 15, 16 times. You have the S&P 500 at 1,600. So we still have a ways to go. But that needs to be allowed to happen. We need to blow the rot out of the system and the bubbles out of the market, and get the markets back on an honest price discovery mode rather than this constant intervention and coddling by the Fed. I don't have any hope that it's going to happen, but at least this time, all these people on the way down from 33.80, where it stood February 19th, that was only a month ago. The stock market was at 33.80. All the bulls were coming on CNBC saying, there's nowhere to go but up, 3,600, blah, blah, by the end of the year. So we've come down the elevator shaft pretty rapidly, but I still think we've got a ways to go, and this needs to happen. Main Street, I think you're going to have a sudden surge of unemployment claims in the next few weeks because people are just being laid off left and right as they close businesses and shut down public events. But it's going to be a spike that I think will be over in a couple of months. Businesses will reopen. These are mostly service businesses that are being closed down anyway. They'll open as fast, reopen as fast as they were closed. People will be called back to work. Income paychecks will start flowing again. Spending will happen. So there is a tremendous hysteria going on in this country about the economy, and what Congress is doing with a $2 trillion soup-line bailout bill of every corporation in America, good, bad, and indifferent, big, small, and any industry you can think of, I think is downright crazy. It's just going to bury federal government further in debt, further bury future taxpayers as far as the eye can see. But, this is what we're up against because the hysteria has been, exacerbated so tremendously by self-serving politicians and central bankers who can't resist a good crisis. Have a moderate, small crisis, let them blow it way out of proportion, and then start doing all kinds of crazy stuff that violate every rule of common sense and sound money and prudent financial discipline that was ever invented. That's what they're doing right now. So we got a real mess here, but it's not because of the COVID-19 virus. It's because of all of the forces of government and central banking in this country, and all of the forces of Wall Street that want upside only and to be, socialize the downside and capitalism on the upside. All of this is coming to a head, and it's making it appear far more dire than it actually is. This isn't the 1930s. This isn't the Great Depression. By September, we're going to, the economy is going to be back to a reasonable keel. But it's not a strong economy. It's not a booming economy. Trump didn't fix anything. He's making everything worse. And maybe the best thing you can see here is that this is some kind of wake-up call that might get at least a few people thinking about we need to do things in a fundamentally different way going forward.
So David, in theory, I agree with you. Things will turn around. The ultimate bid for our economy is the fact that we all want to ultimately get back to our lives, get back to some sense of normalcy. But one thing that I would say, obviously I expect McDonald's to be back opened and, people to be back to work. But in the grind of this, people are not going to be making their mortgage payments. They're not going to be making their rent. There's going to be defaults. There's going to be a lot of churning that takes place. And it may not look the same in September as it did in February. And that's my question too. How much of a disruption is it going to be for people's lives?
It's a great question, but I don't think it's going to be nearly as great as all of these hand waivers are saying. First of all, you have to remember, we got $1 trillion safety net in this country, state and local and federal spending for food stamps, unemployment insurance, cash assistance, Medicaid, all the rest of it is $1 trillion, and it automatically expands. So if some people, fall over the edge and run out of cash, the safety net is there. That's the first thing. Second, unemployment's automatic. There's 26 weeks of unemployment, so anybody that's getting laid off here is going to get unemployment within days. So that may not be 100% of their paycheck, but it's something like 60 or 70% in most cases. So what people are not going out to bars and restaurants and movies and public events and so forth. So they're going to be spending less as well as earning less. But it doesn't mean that everybody's going to be defaulting on their mortgage or their car payment. That's ridiculous. Now, a lot of people are, and I think the lenders maybe will get a wake-up call here. It's the same old thing. We encourage everybody to live hand to mouth, and if you don't have the money to buy something, borrow it. This all has to change, but on the margin, it's not going to take down the 21 trillion GDP. On the margin, it's going to put a few 10 million more people on welfare for a while and on unemployment, and that's why it's there. But we don't need to be sending a check, for crying out loud, of $1,500 out to everyone that has a pulse in America or a Social Security number. This is, pure madness. So why are they doing this? They're going to send it to me. They're going to send it to you. They're going to be sending it to anybody listening or viewing your program. That is crazy as hell.
I couldn't agree more. David, I'm here outside of Austin. In Williamson County, they are doing a stay-at-home measure. They're announcing that today as we record this on March 24th. That's going to be announced today. I know you're in New York City or New York, and in New York at the Javits Center, they're turning the convention center into a 1,000-bed hospital. This coronavirus seems to have taken the world by surprise, and it is overwhelming in the response that we're seeing, and the supplies are being depleted. Medical, places are running out of masks and supplies. I mean, many places are reporting, supplies for only a week left before they're depleted. What are your thoughts on the virus?
Well, I think that's mainstream media. That's CNN, that's NBC. The system is responding very rapidly. The number of tests that are being produced are in the millions a week shortly. These supplies, are being generated. Now, there's only 1 million hospital beds in America. Most of the time, 800,000 of them are full, so there's not that much spare capacity. There shouldn't be. The system, couldn't tolerate it. The cost would be too great. So you get a sudden surge like this, and you're going to have overflow, and so the system responds, and they're not having any conventions at the Javits Center, so convert it quickly to an overflow capacity. What's wrong with that? I just think there's way too much, arm waving and hysteria going on here. And the economy is not being hurt quite as bad as people say. I live in New York City, where I'm out early today to get some exercise and walk around. All of these restaurants that are closed, allegedly, are not closed. What's happening is they're delivering either through delivery, guys or carry out, and it's just the modality of business is changing. There's a surge in the number of people who are walking the food from the restaurant to your home, as opposed to you walking from your home to the restaurant. Now, I don't want to minimize it. Obviously, revenue is down at many of these places, but it's not like we're going into some economic blackout or black hole. The other thing I want to say very strongly is capitalism doesn't have a death wish. That's what the Keynesians say. That's what the statists and the big government people say. That if you don't let us spend all this money and intervene in all these ways and put safety nets and soup lines and bailouts under everybody, we're heading to the 1930s. Complete, total nonsense. Self-serving lies. We shouldn't believe it. If the public gets a little more rational about social distancing and avoiding large groups for a few weeks, I think the whole thing is going to pass. We've already seen that in other countries. The reason it looks like there's a virus spreading like wildfire in the United States is we're testing like wildfire. It's proved in every country that the rate of cases being reported is a function of the rate of testing. And, we're now in that part of the curve where we're testing like mad. And so there's 46,000 cases. But let me suggest that if you look around the world, the rate of reported cases in Japan is 1/1000th of the population. The rate of reported cases in the United States is 1/100th. The rate of reported 1/100th of 1%. The rate of reported cases in Italy is 1/10th of 1%. So everywhere from the worst case Italy to Japan, which is doing almost nothing. It's not closed its restaurants, it's not closed its subways and all the rest of it. There's a rate of exposure that's massively different from one country to another, and the only thing that explains it is testing. In Japan, they didn't test. They don't have any cases. In South Korea, they had a massive amount of tests, and they had a lot of cases. So, this is not the Black Plague. This is not 1335 in Southern Europe, and we ought to get a grip on it, I think.
Points well taken. David, on a more optimistic note then, we see Zoom up 18% today. I don't know what it is at the very moment, but here we are on Zoom during this pandemic crisis. What businesses do you suspect to thrive in this, out of this, and as we go back into normalcy in our economy?
Well, in the very short run, the delivery businesses, the home entertainment businesses, obviously are getting a boost out of this. But that will pass as soon as the health emergency passes. I think maybe if there's any rational investors left in Wall Street, as opposed to people who are just speculating on what the Fed is going to do, companies that have better balance sheets, more cash reserves, are not as inclined to waste their balance sheet capacity and their cash on financial engineering, might get a little better reception from the stock market as opposed to those who didn't. I think it's kind of outrageous that you have Boeing now down there, its hand out in every direction in Washington, asking for a huge bailout after it spent $100 billion buying back its stock. I mean, Boeing is in a highly cyclical and also vulnerable business. Boeing can be hurt badly by wars, by terrorism, by plagues. They never, ever should have been draining their balance sheet, buying back stock hand over fist. The only point of that was because they got, their stock price went from 100 to 400. That was Wall Street speculators going for the ride because these irresponsible, reckless, stupid people on the board of directors of Boeing were countenancing this kind of really reckless financial plan and operation. So today, they got their hand out looking for a bailout. I think they ought to have their hands chopped off, to tell you the truth. And if Boeing can't make it because they've used up all their cash, let them file for bankruptcy. It's not going to stop the company from running. It's not going to throw any workers, out on the street. But it will cause the shareholders to get their just deserts, and the lenders to this reckless operation to face some losses. This is what we need to happen if we're going to prevent this from recurring in the future.
Well, there you have it, everyone. David Stockman of David Stockman's Contra Corner. David, if people want to learn more about you and the work you do, please let them know where they can go and what they can expect to find.
Well, I publish a commentary and analysis 5 days a week at David Stockman's Contra Corner. You can just search Google, it'll pop right up. It's a subscription service, $1 a day, so it's not all that expensive, but we cover the whole gamut from central banking to fiscal policy to Washington politics, Wall Street and what companies are doing, and global economy and financial system. And this is a time where we're in uncharted waters. And I think the status quo that has prevailed for the last 30 years that assumes that all this is sustainable and real is now getting its comeuppance. We've been living in a fantasy. People are going to have to figure their way out of this the morning after this coronavirus does pass. We're going to be in a new world, and I try to provide some insight and analysis, in part based on history, because if you got any sense of history, the last 100 or 50 years, you realize that what we've been doing for the last decade or two is totally an aberration. It violates every rule of rationality, financial discipline, and sound money that's ever been discovered by mankind, and we're going to have to get back to a more sensible view of things. So that's what you can find.
David, thanks so much for coming on the show today. Stay safe, and I hope to do another one of these interviews in short order here, especially as things play out. Maybe it's sometime in September,
okay,
as
sounds
the
good.
chips start to settle.
Okay, very good.
Thank you, sir.